I'm Dr. B, and yes, I'm a real ER doctor, so you may be wondering, what am I doing here in this space? Well, after years of pain from sports injuries, I listened to my doctor and had to pivot into a career that would keep me off my feet as much as possible. I also have a degree in finance, and so it was a natural transition to join Verified Investing. I'll share my prescription for becoming a successful investor right here on the Market Pulse. Welcome to the Market Pulse. I'm Dr. B here at Verified Investing. Thank you so much for watching. Today we have a great episode, a special guest, and today is probably one of the most important episodes you're going to see. We're going to talk about market cycles. We're going to be talking about the Wyckoff market cycle. You have 4 different phases, okay? Accumulation, markup, distribution, and then markdown. Okay, most professional investors, smart money, they're buying at the accumulation phase, they're being patient, waiting for the markup phase, and then selling at the distribution phase. Whereas retail buyers, right, and I was there at one point, they're buying at the distribution phase and then selling at the accumulation phase. So why does this happen, right? So there's something called the Wall Street cheat sheet. It's the psychology of a market cycle. And basically what happens is people see the price going up, they believe in the stock, they become optimistic, they become thrilled, they start buying stocks on margin, they become euphoric, and then what happens? The price starts to roll over, it can't go up forever, right? Gravity kicks in, and they get anxious, they start to panic, they're in denial. And what do? They sell at the worst possible time. It's happened to me before, but as soon as I learned these market cycles, it changed how I looked at the stock market. And now I'd like to welcome our special guest, Jim Wyckoff. He is the Senior Market Analyst at Kitco News and has spent over 40 years in the financial, stock, and commodities markets. And although you're not the creator of the Wyckoff market cycle, Jim, it does have your namesake. So how do these market cycles affect your investment strategy and what you do in the markets?
Well, Dr. B, first of all, thanks for having me on the show. What you described in the accumulation and the markup and distribution phases is really a lot of psychology I think you're going to talk about. Another way to put it is, when is a market the most very bullish to the retail trader? It's at the very top, right?
Yeah.
A market is the most bearish for the average retail guy for what he knows at the very bottom. So when you think about it that way, as people move to one side of the boat, as traders move to one side of the boat, it gets heavy, and at some point it's gonna capsize. So that psychology aspect of the marketplace that you're going to discuss is very important for all traders.
And so how do you look at this with your own investment strategy? Is this something that one of the first things that you look at?
Well, I'm an old-fashioned trend follower. When I got into this business 40 years ago, the computers and computer trading software, they were in their infancy. So I would get charts in the mail, and I would use my ruler and draw trend lines and such, and concentrate on studying the market in that way, and the technicals in the market in that way. And what I found was that price trend is paramount in all trading and all analysis. And what you showed there with your Wyckoff method chart was basically a period of a market trading sideways and then starting to trend and then trading sideways again. So I would encourage all traders to know the trend of the market in which they're trading and the time frame in which they're trading.
The trend is your friend, absolutely. So we're going to go over here to a real stock chart. This is DocuSign. And you can see here how the Wyckoff market cycle is playing out. I could pull up 100 charts on TradingView just like this, and you'll see that this is exactly how it goes every single time, from the small time frames to the large time frames, right? This is a chart of AMD. And so you have to ask yourself, where are we here in the market cycle? One of the things that, as a physician, we learned about the neurochemistry, and we talked about the fight or flight response, the stress response, how our body reacts to stress. And so we're wired to react to stresses in our environment, such as rattlesnakes that we see on the trail, or things like falling stock charts if we're long on the stock. And so we react the same way. And it's really important to know how we are going to react and become emotional when things get tough. And so, you have the amygdala in the brain. That's one of the stress response center. That then sends signals to the pituitary gland, which sends hormones to the adrenal glands. And as you see here, the adrenal glands then release adrenaline, cortisol, which increases your heart rate. You develop tunnel vision, your blood pressure goes up, you start to sweat, and you end up making the wrong decision at the wrong time. And so just knowing this is so important before you decide to make an investment. And it allows you to say, okay, I know this is probably going to happen to me if we have a big crash in the markets, but really we should be buying there at lower levels, especially if it's a good company or the S&P 500, and just being patient. So take a look at this chart of Nvidia and ask yourself, are we closer to the accumulation phase or the distribution phase? And it's really key that you look at this. Probably I would say that we're closer to the distribution phase than the accumulation phase. So don't get caught buying up here. Be patient, wait for a market drawdown, and then go in like a sniper, Jim, what are your thoughts on that?
Totally agree, Dr. B. The chart you just showed suggests to me also that Nvidia, right? That was Nvidia.
Yep.
It suggests to me that buyers have become euphoric at these higher price levels. The market's become too bullish, and probably a topping process is not far away just by looking at that chart.
Absolutely. Well, Jim, thanks so much for joining us. We'll have you on again. And thanks everybody for coming and watching the first episode of the Market Pulse. I'll see you next week. Take care.